one of the traps that sellers get caught into is if they think their business is worth a lot of money, they're waiting for this payday. But the reality is when the decision is made to sell a business, you now have to get it done quickly. But if you decide to sell and then you don't, that attitude is going to start to come into the business. You're going to stop returning calls late at night. You're going to stop doing the extra mile for your clients. You're going to stop looking for new ways to innovate. And the top line is going to start to dip. And then the bottom line is going to start to dip. And then as soon as you have financial statements that show a decline, well, then every buyer out there is worried that you're trying to toss a hot potato, which you are.
This is Experts Unleashed, revealing how professionals and entrepreneurs transform experience into income while positively impacting the world. For years, Joel Irway has helped entrepreneurs develop and launch their expert-based businesses, growing them beyond 6 and even 7 figures a year. Now, a professional expert serves their community through paid training, education, or service. This podcast will help you design and execute your plan to become a 6 or 7 figure expert without a massive team. To get more information or apply now, visit theperfectexpert.com. Let's get started.
Hey, what's going on, experts? Joel Irway here. Welcome to another very special episode of Experts Unleashed, and you are in for an amazing interview today. I have a very, very special guest, an expert in the art of deal making with small businesses, David Barnett, and we are going to be talking about something that is super critical for anybody who is in the business world, something that doesn't get talked about nearly enough, and I'm very, very excited to be jumping into today's interview. David, welcome to the show.
Oh, thanks for having me, Joel. I think that I'm being infected by your excitement. But wow, what a powerful entry. And yeah, I'm ready to go. I'm shaking here. Let's go. What do you want to know?
Awesome. So David, let's pause real quick and let's introduce my audience to who is David, what is your background, and why am I going to be calling you the chief deal maker today in our episode?
Sure. So, I've always been interested in business ever since I was a kid. I always had I'm Canadian, so I was always shoveling snow for money most of the year. And then when there was no snow, I was mowing lawns and delivering flyers and stuff. And so I was always interested in earning money as a child and interested in business and learning about people's businesses. And I went to business school. It took me a few years to realize that they weren't really teaching me how to be a businessman. They wanted me to be a middle manager in some big company. And that didn't really sit with me. I was sitting around, working on case studies about whether or not General Electric should enter some new market in another continent. And I thought, I'm never going to do this. I'm interested in why that tire shop guy made the decision he did about the new sign, right? That's what I want to know. I want to know, how do people who run these everyday businesses that are all around us make money? And I got a real opportunity to start learning that when I got out of university, because I got a job with the Yellow Pages. Joel, do you know what those are?
Oh, yeah.
Okay, so the back before the internet was what it is today, there was a different kind of internet. It was all printed out on paper, and it was all local, and it sat under your phone. And so I got a job with the Yellow Pages back in the late 90s, when if you typed plumber into Google, you would get a guy in California. No matter where in the world you were, that was the guy, because he had a web page, and he was the only plumber with a web page. And so if you came home from work and there was water like leaking down out of your ceiling and you knew you needed a plumber, you grabbed that yellow book and you opened it up under P for plumber and you called someone. And I got a job working for those guys, and I went around and I visited small business owners and managers, and I visited basically businesses throughout the province I live in, because the different books came out at different times. And so I would go and I'd sit with these people and I would ask them, what kind of customer do you want to hear from when the phone rings? Who do you want it to be? And what are you trying to do? And how do you make money? Because I always had to try to present my advertisements as a valuable way for them to invest a little bit of money in order to get something back, which meant that I had to understand how they earn money, what kind of customers they wanted, and whether it made sense for a pizzeria to buy a full page ad or not, right? Mm-hmm. And it had to make sense to them. so I did that for years, and the internet slowly started to show us plumbers that lived closer to where we live. And I realized, hey, you know what? There might not be a future in this yellow page thing, but I still had that entrepreneurial bug anyway. So I quit and I started a business with a partner. And after about a year and a half, we got tired of it. We were serving homeowners and they were emotional and irrational and flighty, and I didn't like them. I'd much rather deal with business people. And so I started a new business as a finance brokerage. So what I was doing is I was helping people get money for their business. I was helping them get operating leases on equipment, capital leases on equipment. I was helping people get factoring facilities, which is when we sell our accounts receivable to get cash today. And I was helping people get business loans, mortgages on commercial properties, this kind of thing. And so here I was again serving small businesses in a different way. I was helping them grow. And I was meeting these people who were trying to get money to buy existing businesses. And I kept running into really poorly done deals. And, it came to a culmination one day when a lady at the bank, major Canadian bank, called me up and said, Dave, because I used to go to the bankers for referrals when they couldn't do loans, I would say, hey, send your customers to me. Maybe I can help them with a leasing company or something. So the lady at the bank calls me and says, Dave, I have this lovely couple here. They just moved from Korea. They're trying to buy a convenience store, and they have a deal written on a standard form to buy a house by a real estate agent. And it says they have 10 days to get 95% financing for this business. And it's completely not how we do business deals. But these are the kinds of people that we're trying to help people buy and sell businesses. Like the real estate agent is an expert on selling houses, not businesses. So the financial crisis came, ultimately, is what happened. And so in 2008, 2009, half the companies that I was using as sources of capital went under. And I realized, I need to make a pivot because I'm going to be running out of money. And I realized that the market of people buying and selling businesses was underserved. So I joined up with a major international franchise brand in the business brokerage world. And I chose them because they gave me access to training. So after about two and a half years of working and studying and taking courses, I became certified as a person who can help people buy and sell businesses. And I was the first person in my province, first person in New Brunswick to become certified. And it's a designation that had been around at that time for over 30 years. And so I ran an office, and over the course of 3 years, I helped buy and sell 36 different companies for other people. And so by most measures, I was one of the most successful business brokers ever to operate here in my hometown. And business brokerage is a terrible business, and I don't recommend it to anyone. And the reason why I say this is because it was very exciting, and every day I had to solve new problems, and I had to try to make a seller's desire fit with a buyer's need and work out all the details of the deals. But here's the problem, and it's cash flow. So it would sometimes take me a year or two to secure a listing with a business owner that wanted to sell, to convince them that now's the time and sign my contract and agree to pay me a commission. And then once I had the listing, it could take years to actually sell it. So when I got into business brokerage, I signed up a fried chicken franchise and put it up for sale. And 3 years later, when I was deciding that I had to get out of it, it was the last business I sold. Sometimes I would sell a business and I'd be given an $80,000 or $90,000 commission check. And I'd be afraid to spend the money because I wasn't sure when the next one was going to come. And there were a couple of periods of 9 months that I had to live through paying my office staff, my overhead, my advertising, my bills at home without a commission check coming in. And I just said, this is crazy. Can't live this way. So I packed it in and sold the office to an associate, made a deal with him, and did some Napoleon Hill stuff. I sat down, I tried to imagine what I wanted, and I wrote out a list. And I said, I'm gonna spend some time being a sales rep here in the region. I'm gonna have a car allowance, a home office, I'm gonna have a company paid cell phone. Like I wrote out the job description and everything. And 3.5 weeks later, I reported to work at that job, and it was with a bank. And I started traveling through the region, visiting with clients, and my phone kept ringing, my cell phone kept ringing. And it was people who were saying, Dave, I got your name from a guy, or I got your name from a lady. I'm trying to buy or trying to sell a business. and I'm told you're the person. And I kept saying, no, I'm not the person anymore. I'm not the person anymore. I don't do it anymore. I don't do it anymore. And one day Bob called me, and Bob had been a buyer that had come into my office, so I knew him. And he said, Dave, I found a business, and I've been to my lawyer, and he tells me I'm supposed to get this out of the deal. And I've been to my accountant, and he says I need to get this. But neither of them seems to be able to help me stick handle my way through this deal. They don't seem to know what to do. They just know where I need to end up. Can you help me? And I said, Bob, I can help you. I can help you through this. But buddy, I've got a job. I've got a full-time job. I'm not available during business hours. So I'm not a broker anymore. So I'm going to have to charge you like a consultant. I'm going to have to charge you an hourly rate, and I can't meet you during business hours. And he just said, great, Saturday at 9 it is. And I was like, oh, all right. Okay, Saturday at 9, I got an appointment.
Works.
And that was the beginning of this side hustle consulting gig where I used my expertise and knowledge and experience that I gained in the business brokerage business, which was a terrible business, and I turned it into something very different, a completely different kind of cash flow model for me. And very slowly that grew over a 2-year period to the point where I was earning almost as much on the side as doing consulting work as I was from my paycheck. And when the bank announced that they wanted to restructure their sales side, there was an opportunity for me to step away. And I said, yeah, now's my time. And I did it without any fear because I was already earning great money doing this kind of stuff. And, you know, I've got a YouTube channel and I've got books that I've written that are out on Amazon. And all of these things came out over the course of this time as I realized that I had information that I could share with people. And I also had a very special skill that people had been telling me about ever since I was young, is that I can take really complex things and break them down and teach them to people in a way that's easy to understand. And if there's anything that's difficult to understand, it's a purchase or sale of a small business, because we're dealing with people that are not sophisticated business people a lot of the time. They're technical people. They know they're the best at putting shingles on a roof. They know everything there is to know about making sure your roof doesn't leak, but they don't understand the operating capital needs of their business, and they don't understand how to take a look at their balance sheet and to figure out what the return on their equity is, and they don't even know why that's an important thing to understand. And so a lot of the time when I was dealing with these business deals, I was having to stop to educate people about why things had to be the way they were. And I'll give you a really great little snippet example. There's a beauty salon for sale. And so I asked, you sell gift certificates? And she was like, yep. And I said, okay, well, do you know how many are out there? Nope. Okay, can you estimate? Can you try to figure it out? So she went back for a couple of years in her books and she looked at what her sales of gift certificates were. Then she tried to figure out how many had been redeemed. And at the end of the day, she said, yeah, I think there might be about $40,000 worth of these out there. And I said, okay, so you realize that we're gonna have to make some kind of adjustment with the buyer. And she didn't understand. She's like, what do you mean? And I said, well, you've been paid already by people
right.
services, and you haven't done the work. I said, it's just like owing money to the bank. You owe money to your customers as a group, and you don't even know which ones you owe money to, but you owe them a bunch of service. And if we sell this business to the next person, that owner is going to be expected to redeem those. And we don't even know what the nature and size of the liability is. So I had to, she didn't realize that she actually had a debt. She thought, hey, I've just been paid for something I haven't done yet. That's great. She never really considered what that meant for the next owner that was going to come into the business.
That's fascinating. Okay, so you've got, obviously business owners who don't understand what is required to sell their business and what liabilities and what assets that they have. I want to go back to a couple of things that you talked about during that story, because I think, especially in this particular field that my listeners are in, they're coaches, we're consultants, we're selling information products. So in that nature, where we're selling information, we're not the most educated bunch in terms of buying and selling businesses. So you mentioned during your story that when you're working as a brokerage, you notice there were a lot of poorly done deals, right? What does that mean? When you say poorly done deals, I'm not entirely sure what a poorly done. Yeah.
So a poorly done deal would be a deal that's done by somebody who is just as ignorant as the people that are buying and selling. So I'll give you an example. There was a deal. It was a gentleman, and he wanted to buy a convenience store, and it included the real estate. And so they were negotiating. They came down to a price, and then he had to try to get the money. And so when you're buying a business, there's a couple of different things you're trying to finance. The long-term assets are typically financed with long-term debt, like a mortgage on the building. And then your shorter-term assets can be financed in other different ways, like the inventory. Maybe we're going to get a line of credit. If there's goodwill in the business, that often can't be financed with any kind of debt. It usually has to be equity that the buyer puts in, or what sometimes happens is the seller ends up financing part of the transaction. So, in the case of this convenience store, it was a real estate agent trying to put the deal together. They came to me to try to get some financing. I was able to help them secure the mortgage on the building. I was able to help them secure a line of credit to help support the inventory. But there was this last bit beyond the cash that the buyer had of his own that represented sort of the goodwill, the fact that the business had been there for a long time and that it had a regular and steady clientele. And it was a relatively small gap, like on an over $1 million deal, it was about $50,000. And I said to the real estate agent, I said, well, traditionally this would be financed by the seller, what's called a seller financing note or a vendor take-back note. And so the agent went to the selling agent and said, this is what we're going to have to ask the seller to do. They're going to have to do this. And they said, okay. And so then the agent changed the offer, and then the agent delivered the offer, and the buyer and seller signed the offer, and they got to the closing table, and they were at the closing table at the lawyer's office. And they said, where's all the money? And they were $50,000 short. And they said, oh yeah, but don't you remember I called you on the phone and said that the seller had to finance that. But the real estate agent never put it in the offer. He never amended the written offer to say that they were only going to bring like $1 million and that they're going to be 50,000 short and that the seller was going to finance that. So they didn't do the paperwork properly. And that was the person's job. And so at the closing table, what they said is, oh, well, you don't have all the money that the deal says you're going to have. We're not closing today. And by the way, the buyer's $30,000 deposit, we're going to keep it. So the deal got screwed up. The buyer got screwed out of his deposit money. He never got to buy the business. And it was all because the person in the middle, the real estate agent who was supposed to understand how to do deals, didn't do it properly. Even
so
after
the buyer was out $30,000.
Yes, he was.
Oh,
and this was happening all the time. And, I did a live presentation back in the fall. There were 20 people in the room. And I always start off by asking people what they do. And there were 2 lawyers in the room. And I told the story about the Korean couple that were going to buy the business with the 95% financing in 10 days. And one of them raised his hand. And I said, hey, what is it? Like, you have a question about the story? He's like, no, I just wanted to tell you that it happened twice last month in my office.
Oh, man.
So to this day, it still happens. And the problem is that people who are small business people, they know their craft, they know their skill, but they don't understand that when it comes time to sell, there's a difference between a business broker, a real estate agent, or any other kind of professional. They might not even know that there's such a thing as a business broker, right? They've got their head down, they're focused on their business. And a lot of your listeners who are consultants and things, the engineering consultant, he's like focused on his files, working on his projects, figuring out problems for his customers, his clients. But that doesn't make him an expert in selling his business. It makes him an expert in engineering. Mm-hmm. And so these poorly crafted deals, I would see all kinds of things. I would see, I had one case where somebody came and they had sold a business and they had financed part of the deal, and the buyer defaulted on the note. And they called me up to find out what could be done, if it made sense for them to try to repossess the business, to try to resell it or what. And I sat down and went through the numbers with them, and I showed them that they had sold the thing for probably 80% more than it was worth anyway. And they had probably already collected more than the business was ever worth. Like, they asked way too much. They didn't even know they were asking too much, and they happened to meet a buyer who wasn't smart enough to figure that out. And so I showed them why the buyer failed. I said they got into a situation where they were way over leveraged. They never even had a chance. And they weren't working with anyone who would have ever been able to point this out to them. And that's the sad thing, is that people will get into these deals and they'll victimize themselves because they don't know what they're doing. It's what I say all the time on my YouTube channel. I always say to people, like and share these stories and like and share this information, because people are ruining their lives because of ignorance, because they just don't know what they're doing and they're getting into these really bad deals.
Right.
Deal structure is a big focus on a lot of the conversations I have, because buyers can protect themselves through structuring a deal correctly. When we do the seller financing notes, we often put in a clause that says that the note is subject to offset in the case of an undisclosed or undiscovered lien or a material misrepresentation. So a material misrepresentation is when a seller says something that isn't true or leaves out important information that they know in order to create an illusion that there's more value there than you think. So I had a client, unfortunately, who called me after he had done the deal down in Pennsylvania, and he had entered into a deal where he bought a business. 20% of the revenue came from one customer, and it was an insurance restoration service. So it was a cleaning business, and they would clean draperies and things like this. And so if there was a fire or water damage in a home, the insurance company would come in, they'd bring contractors in. These guys would remove that stuff, bring it to the cleaning company, okay? Well, it was never disclosed to him that one of the big platforms that the insurance restoration company used is that they claimed that every one of their subcontractors had 10 to 15 years experience. And when this guy bought the business and the insurance people, the insurance claims, contracting people found out, they invalidated him. They kicked him out of their little group. And just like that, overnight, 20% of the sales disappeared. Okay?
Wow.
And the seller said, well, I didn't know that. But the buyer talked with the insurance guys, and they're like, of course he knew. He told us his business was up for sale. We told him about this. So that would be a case of a material misrepresentation. And if the buyer had a sufficient seller take-back note in that case, he could have stopped paying the note. He could have gotten some kind of recourse because not all of the money had changed hands at that point. Unfortunately, he didn't do that. He borrowed all the money at the bank and he paid the seller. And the seller was like off into the sunset with all the cash. And if the buyer wanted justice, he was going to have to engage an attorney to go and file a claim, and you know where that goes. It costs a fortune.
Yep. So that's fascinating. What I'm discovering is that there's so much risk in the process of buying and selling that people probably don't even understand. I mean, deposits could be gone and you could be out the money for the deposit plus all the fees you have to pay the people who are involved. And so the importance of knowing, of having someone who knows what's going on just to protect your deposit as a buyer. And I mean,
it's not difficult. It really isn't difficult. It's just knowing what you have to watch out for. Mm-hmm. And you know, the way that I position my services is like insurance. I talk to people all the time who are contemplating $1 million transaction. And so does it make sense to spend a few $1,000s just to make sure that it looks right to an experienced set of eyes? And that's the way I position myself.
Yep.
Because ultimately people buy businesses to avoid risk. You know, everyone has seen, you know, in a business plan, that break-even analysis where it says we have to get to this certain point in order to break even and start making money. And when somebody buys a business, they're paying for that goodwill because they don't want to have to suffer through that startup period trying to reach the break-even. Because the break-even point could be in 6 months or it can be in 6 years. We never know when we start a business. But when you buy something that's already rolling, you already have the customers, you already have the sales, you already have the staff, you already have the profit. The question then becomes, what is the likelihood that this cash flow stream is going to carry on into the future under my stewardship? And what risk do I associate with that? And that's going to determine how much I'm willing to pay for the business. Mm-hmm. And the question about my stewardship is the linchpin to the whole thing. Because you could have a business that's producing a great profit, And that profit is going to determine the value of the business. But whether or not the buyer is ever going to buy the business is going to come down to the question of if they believe they can carry it on under their stewardship. And that's when we get into all kinds of questions about things like, is the goodwill personal or is it corporate? And so for the people that listen to your podcast, for example, a lot of them, because they're consultants and coaches and they have their own business where they're the ones serving the customers, it's going to be hard to sell that kind of business because the buyers are all going to be afraid, hey, people are doing business with you, Joel, because they like you. How do we know that they're going to carry on with me? Maybe they aren't going to like Dave. And so it brings a whole new sort of level of complexity and risk for the buyer. Will the clientele actually want to carry over with me? And again, that kind of stuff is dealt with deal structure. It's a different kind of transition. And there's all kinds of examples of how you can make that work too.
What would you say is the biggest, the most important elements for, let's say we've got an agency or a consulting business, right? For somebody who could be looking at putting their business up for sale in the next 1 to 3 years, right? And they're an expert-based business. Like, what are the most important elements that they need to be aware of? Do you help with valuation, or are you really just in terms of deal structure?
No, it starts with the valuation, because one of the biggest problems people have is that they don't know what to ask for to set up their business. So I work with buyers and sellers, and they have a menu of services for both. So with a seller, the very first thing I do is I do a valuation, because that's going to uncover what a reasonable asking price might be, and it's going to demonstrate why, right? And so for a lot of businesses, when we go and we do the valuation, the very first shock is that, oh my God, the business isn't worth what I thought it was. Well, if the business isn't worth anywhere near what you thought it was, maybe a sale isn't even part on the table anyway, right? Maybe it's not even going to be worthwhile to try to do a sale because we're not going to be able to realize enough value. Well, if the business isn't worth something, is there anything else here we can salvage? So I'll give you an example of something that I worked on about 2 years ago. It was in a small accounting office. So one accountant with a couple of bookkeepers and a receptionist, okay? And they were growing their small business, financial reporting and tax return business, but they had this personal tax return business too. And most accountants, if they're going to open a new office, that's the first thing they go after, because it's easy, right? Come in here with your tax return, get your tax return done. And so this accountant had built up this tax return business, but she really was interested in the small business accountant. And so when the small business side of her business got big enough, she said, I need to get rid of this personal tax return stuff because it's a nightmare for 8 weeks every year. And then it goes away. And it's just this feast and famine, and it's really bothersome. So what she did is she found another new accountant and basically just made him a deal. Said, hey, would you like to have this book of business? And as soon as you frame it as a book of business, you start to think about people who are like financial planners and insurance salesmen and stuff like this, right? It's basically, would you like to purchase this clientele? And so the deal that they made was based on how much revenue the new accountant got from that list over the next couple of years. And so there was never any worry from the buyer's point of view of whether or not the customers would come over to him or not, because the amount of money he paid was based on the ones who actually did. So it was risk controlled, which meant that he was confident moving forward. And so for every year for the next couple of years, he gave part of those revenues to the selling accountant, and then he was clear of it. And then all those people belonged to him, right? And then the people who never wanted to migrate over, who never liked him, who didn't want to file their tax return with him, he didn't pay for those people anyway. So it was a very prudent way for him to grow the business. And because it was structured properly and the selling accountant understood the risks and understood how to take the risk away, she was able to do the deal almost immediately. Like as soon as she approached the first person that she approached and said, this is what I'm willing to do, he was like, oh, I'd be a fool not to do that. And so it was done. And that's one of the traps that sellers get caught into, is if they think their business is worth a lot of money, they're waiting for this payday. But the reality is when the decision is made to sell a business, you now have to get it done quickly because there's something pushing you. It's either a personal thing like poor health, divorce, burnout, fatigue, whatever personal reason it is, But if you decide to sell and then you don't, that attitude is going to start to come into the business. You're going to stop returning calls late at night. You're going to stop doing the extra mile for your clients. You're going to stop looking for new ways to innovate. And the top line is going to start to dip. And then the bottom line is going to start to dip. And then as soon as you have financial statements that show a decline, well, then every buyer out there is worried that you're trying to toss a hot potato, which you are, because it's becoming a hot potato in your hands because you don't have the passion and drive anymore that you did to keep the business going.
So just like anything else that has to get sold, it needs to be presented in a way that's attractive for potential buyers, right? And that makes total sense. And it's, that's why you have people on the external look at things to, we're messaging specialists. My primary business, we help people with marketing and sales webinars. We create offers for them to sell to their customers. They're essentially doing the same thing, only it's in the world of a business, making it attractive to a potential buyer.
Joel, you hit the nail on the head, and very few people make the leap. But let me tell you a quick story about a little cafe owner, a little coffee shop owner. It was like coffee, muffins, lunch, soup, salads, like that kind of stuff, right? And she hired me. I did a valuation on the business. I came back to her. I said, look, I think we could sell your business for about 75 grand. Let's ask 79 or 89. And she looked at me and she said, oh, that's crazy. I need 150. Oh, okay. I said, so here's what we're going to have to do then. You're going to have to implement a new policy that says nobody's allowed to buy 1 cup of coffee. It's a 2-cup minimum transaction. And she looked at me like I was crazy. She was like, people come here who only want 1 cup of coffee. I can't force everyone to buy 2. And I said, so wait a minute. You're telling me that you need to somehow consider the needs of your customers in your business? And that's when she started to realize that her request was the same thing. It was the same thing. All she was thinking about was herself and what she needed out of the deal. And the way I always explained it to people is that when they wanted to sell their business, when I had my business brokerage office, I was literally taking their business like it was in a little box and I was putting it on the shelf of my store because it became a piece of inventory in my store. And I had these buyers walking in the door who were looking at what I had for sale. And if they didn't think that it was an attractive thing, nobody was going to pick it up, right? And so it's always the buyer. It's always the buyer. It's what are they willing to pay? And so just like in your coaching and consulting business today, you're thinking, how can I package my services in a way that the buyer is going to find them appealing, as far as the service that they get and the price that they're going to have to pay? It's exactly the same thing when you go to sell a business. How am I going to put it together in a way that's going to be appealing to the person who wants to buy it?
Mm-hmm. It's fantastic. What should somebody in the coaching, in the consulting space think about? Like, let's say they've got this plan, they want to potentially sell it in a year. I mean, is the early stages, should they have someone like you come in and do a current valuation to say, listen, as of your structure right now, here's what you're looking at. Like, here's kind of, what it could possibly be sold for. I mean, are these things called would that be like an audit of their current business, like a state of the business to help them determine like what they could possibly get out of it?
What I do are called most probable selling price evaluations. And, I crunch the numbers and what I do is I do a normalization. So we want to be able to try to compare businesses like an apples to apples comparison. And so different people will manage the books of their business in a different way. And I'm not talking about funny business. I'm just saying, like, you could decide to pay yourself a certain salary. Another person could pay themselves a lower salary and take a dividend, right? I mean, people do different things. It's whatever is working for them. But what we do in the normalization is we try to regulate everything so that we're looking at what if the owner took the wage of a manager, that would be the fair market wage for this kind of business of this size. And so we're able to separate out what the person is earning because they're working in the business every day versus the profit of being the owner. So the sort of the investment cash flow. And then I compare it to other similar businesses. So in the case of a coach or a consultant, I would look at other kind of advisory businesses that have sold. And so we can go through all of that. But here's the simpler thing is you look at what you do every day and say, would somebody pay money to step into my shoes? And so I've walked into owners' offices that have looked like robin's nests of little yellow sticky notes. where they're sitting in there and they've got little scribblings all over the place trying to remember what they have to get done that day. And we know those people. They haven't been on vacation in years. Everything in the business is going through a process that's always in their head, right? And it's not documented. And nobody has authority in the business to make a decision. Everyone's running to them every 5 seconds. Would anybody want to be in that position? The answer is easily no, of course not, right? So you're going to have to show a buyer, here's how you run my business, right? And so think about that. If I showed up to buy your business and I'm going to ask you, how do I run your business once you're gone? Clearly, we need something written down that I'm going to be able to use as a guide. Mm-hmm. So we're talking about documenting processes. We're talking about getting things down on paper or in a computer. We're talking about having an organization, a structure. Buyers, they're always afraid that it's going to take them a long time to learn something. I had a restaurant deal where the buyer was sitting across from the seller and he said, what assurance do I have that the employees are going to stay? Because I need the employees, they're the ones who know how to do the jobs. I need them to make the business run. And the seller looked at him and said, you want an assurance that the employees are going to stay? He said, I guarantee you in a year, they'll all be gone. Because that's the nature of the restaurant industry. There's turnover, right? And then he said, here's my system for finding the best employees. And he started to explain the process he had developed over the years and the ads that he had written and rewritten to try to attract the best quality candidates, and his little tricks. Like, at the bottom of the ad, it says, do not send in an email. Please call this number to make an appointment. Because he says people don't read them. Mm-hmm. And he emails all the time. He just deletes the emails. He waits for the voicemail because it means somebody read the ad. And then he'll call the people back and talk with them on the phone, and he'll make a face-to-face meeting with them. And half those people don't show up, which he says is great because it means they're people who don't show up. He doesn't want to hire them, right? And so he's got this whole system of how he hires, and then he's got the training material so you can get them up to speed and make them productive very quickly. And so by explaining the process of how you deal with the problem, the buyer then felt assured, you know what? I don't have to be afraid of that anymore. And that's what it's all about. So, if somebody is a coach or a consultant, the first question is, what are the processes that you use? And everybody has a process. It's just a question of whether it's documented or not. Mm-hmm. And if you can start to teach somebody else how to use your process, well, now you can actually have employees, you can have other people doing stuff with you, right? And the more of a real business it becomes, so the higher the revenue, the bigger the team, the fact that maybe you don't have to do everything. In an engineering firm, yeah, you need an engineer to do the engineering stuff. But if everything else is being handled by somebody else and the owner is the engineer, well, any other engineer is going to be able to see that they can come in and they can take over that business, right? And if you don't have some kind of professional sort of thing going on in the business and like a retail store, for example, well, then you can start to build something that's attractive to almost anyone. And the time it takes to sell a business comes down to a couple of things. Number one, you're asking a reasonable price. Number two, how many potential buyers are there? So if you're a roofing guy and you have nothing documented and you've got nothing written down and you're running everything by shooting from the hip, the only person who's going to be able to buy your business is another guy with equal roofing experience who may be a little bit younger. And so there's not a whole lot of those. But if you've got everything written down and documented and systematized, well, then all of a sudden you can sell it to almost anybody who's able to learn, right? And so you got a bigger pool of buyers, which means you're going to have an easier time finding someone to step forward.
When I start thinking about the potential of selling a business, the doubts come into my mind of like, well, who's actually going to buy my business? And you talk about it with point number 2, which is the number of potential buyers. And so I've thought about this multiple times over the course of my career with the webinar agency. It is super niche. We build sales webinars for a very finite audience. And I've actually never even considered selling it because I just think it's too small. Right now, I think of it as a nice little cash cow for us. We've got our niche, we've got our processes. I mean, is there such a thing as too niche to sell, meaning too small to sell, like too small an audience to sell?
No, I don't think so. The question would be, are you earning a profit over and above what you would be earning as an employee doing similar work someplace else? That would be the number one thing. Is that, I categorize entities that look like businesses into a couple of categories. The first one being a hobby. So, if somebody's working 40 hours a week and they're taking home 20 grand and they're an engineer, their business isn't paying them enough. They would earn more working someplace else. And sometimes people fool themselves into thinking that they're building something that's going to be worthwhile. In reality, they have a hobby because they're putting their free time into it, which is the same as guys who build model trains in their basement, except the guys with the trains understand that they're putting time and money into something they're enjoying, right? Whereas the person who's working really hard and underpaying themselves in this business that they have, they think that they have a business, they have a hobby. The next level is when you're actually earning enough money that is equal to your value in the marketplace. So if your business is paying you as much as you would earn working for someone else, you still don't have a business, you have a job. And if you think about the plumber with the one helper who drives around the service van going to houses every day, like he's probably earning the same amount of money for himself as he would if he worked for a big contracting firm and he was working on plumbing projects, right? So he owns a job. And he likes it because it gives him freedom and flexibility in certain things, right? But it's really not a business until you have that cash flow over and above the value of your labor in the market. And so when the plumber gets the 10 service vans that are all out doing work every day, and he's in the office making sure that everything is running smoothly, and he pays himself enough money to be, commensurate with being the operator of a business that size. And then there's a profit beyond that. Now it's a business, right? It's a real business. And so in your particular case, there's a couple of potential buyers. There's the person who's really experienced in sales who could fill your role and who could do what you do in designing the offers, right? So that person might want to buy what you have, and for a multitude of reasons. They don't like their job. They want to do something different. That's what we call a financial buyer. It's somebody who wants to buy a business because they need an income for themselves. If you can systematize things to the point where you can kind of step back and have a lot of other people doing all of the parts, right? If you can create like a catalog of standardized offers that can be modified to suit each one of your clients, such that a person that doesn't quite have the same level of skill that you do is able to start pulling this off, well, now you can create something that would be attractive to a different kind of organization that might like to add your service into their fold. And that would be a strategic acquisition. And those guys are going to be able to make more money with your business than you can for a couple of different reasons. Number one, maybe they don't have the same overhead, or they have the people already on staff to do things like the payroll and hiring, copywriting and stuff. And so they can actually cut your costs because of people they already have in their business. And number two, they already have other clients who might be able to use your service. And so they would be able to grow the sales simply by making this an add-on to what they're already doing. And so if you can develop yourself to the point where you're attractive as a strategic acquisition, then you can sell your business for more because that cash flow is worth more to those buyers.
So you're saying there's two types of buyers. There's a financial buyer who is leveraging this as a new opportunity for themselves, right? Mm-hmm. And then there's the strategic acquisition, which is adding your business to their business to help them grow because they don't have that, that service yet, and they want to add that because it complements.
Well, it can be complementary or it can be the same. So the example that I sometimes use is that of the roofing company. So if you're in a market and you can't really grow any further because you've got tough competition, but there's a similar company that goes up for sale an hour away, you could buy them, right? You're in a new market, but because you've doubled your purchases of shingles, maybe the manufacturer now gives you a rebate. So you've saved money across the entire organization by making the acquisition. So that roofer is going to now make more money than the previous owner did because he's able to cut costs. That's an example of this being in the same business. Complementary might be if the roofing business goes up for sale and a guy in the siding and window business decides to buy it, because now he can go to his customers that hire him for windows and siding, and he can now sell them roofing, right? They're both strategic. They're just a little bit different.
That's fascinating. So I've never even kind of considered that aspect, but the buying power of that and the buying value would be something completely different than what I would normally consider as, the main benefit of buying a business. So there's clearly a lot more avenues, a lot more strategic play that goes into this when you're looking at buying and selling business. That's fascinating. So we've discussed a lot today, right? So we've discussed the world of business, which is, number one, it can be very risky if you don't have your crap together, meaning you go to the deal table really not knowing what you're doing.
Mm-hmm.
Verbally, we talked about having verbal conversations. Oh no, we talked about this on the phone, right? Well, it's not on paper, right? That's really what we defined as like a poorly done deal. It's like lots of verbal discussion, but nothing's on paper. And then you get to the deal and somebody could be out $30,000 or whatever, that deposit. And that's terrifying in my eyes. It's just like, that's a risk that they didn't even know that they were probably taking. They might not have realized they can lose that deposit. Maybe they did, but there's clearly risks involved with even entering discussions of buying and selling the business. And we talked about the whole process of being your journey, being a business broker, and how you made the pivot from doing commission only and running your big office, but there's a long sales cycle, long lead time for the sales process. And then you made the pivot to just go straight to hourly, or maybe project-based. I'm not entirely sure, but I think what we talked about was hourly. And that minor pivot kind of opened a whole new world of doors for you, right? And that's kind of, where you transitioned. And I think a lot of people will be able to relate to that, because a lot of times you don't need to make the model is there. You just need to make a slight pivot about how you collect your money. I mean, we had a similar model when I was in corporate world. I was in commission only sales, and I wouldn't get paid. And it was on construction projects. Sometimes these construction projects were 2 to 3 years lead time. And I would put in all this effort up front. And I was out over 6 figures when I left the company, because I had to forfeit all my commissions that were going to be collected over the next 3 years. And so I wouldn't get paid until we shipped our equipment and the client paid the invoice, which was like net 90, 120. So it was a long sales cycle. And so making those minor pivots of just how you produce your models or how you generate your revenue model can be a world of difference, because it sounds like you love what you're doing. I mean, you're very passionate about business, brokerage, and buying and selling businesses. And I think people listening right now, you could be stuck, or you could be struggling, or, just having a lot of stress because of the model, but making a slight pivot can make all the change in the world.
Well, and what was interesting is that the model that I'm in today, the market was trying to tell me, but I wouldn't listen, because I was in this paradigm of thinking about the commission structure.
Mm-hmm.
And something that happened all the time that used to really annoy me is people would come in to talk to me in my office about doing deals and what to expect and all this kind of thing. And then I would find out that they went and did it on their own, and I didn't earn any money from that. And I would be upset about that, or I'd be angry about that. But I failed to realize that these people were coming to me because they wanted knowledge. And it was only later that I realized, hey, if you have a problem with a contract, you go to an attorney. If you have a problem with a tax return, you go to an accountant. If you have an issue with buying or selling your business, why can't you just go to somebody and give them money to help you through it? And so the model is that I do today is well established. I'm basically just copying what accountants and lawyers have done forever.
Mm-hmm. Yeah, there's extreme value to it, because you don't want to be caught in a situation where language is screwed up. I mean, there's so much value. I mean, positioning your business that makes it attractable to a buyer. That's the art of deal making, no matter what it is, a business or a product or a service. And just having somebody in your corner to help you with that is well worth the price of admission. I'm sure of it. And then The upside is you get the insurance of making sure that you're protected when you go into the deal and you present the deal, knowing you're dotting all your I's and crossing all your T's, right? And so I love what you said. The market was telling me, I just wasn't listening. I think so many people at some point during their business career, during their entrepreneurial journey, they're going to experience that in some form or another. So I love that story. David, man, I had an awesome conversation. I really enjoyed this. Where can people reach out to you? Where can people connect with you? Where can they learn more about, you've got a ton of books. We didn't even cover the books that you've written. Where can we connect with you?
Yeah. So the central nervous system of the whole operation is my blog site, which is over at davidcbarnett.com. And from there, I got a website for buyers, a website for sellers. There's a YouTube channel now with over 300 videos, all driven by questions that people have submitted to me. So, there's a wealth of information there. It's all available for no charge. I've got a bunch of books, 7 different titles right now on Amazon. They're all now in audio as well. So if you're on Audible and stuff, you can download those too. And I would just recommend to people that if they're interested in these kinds of deals and they're interested about thinking about this kind of thing, come on over, check out the YouTube videos, sign up for my email list, and I'll just start sending you all this stuff on a regular basis. It'll help to keep you thinking about your exit. Or maybe it'll help you realize when somebody says just the right string of words to you, hey, wait a minute, maybe I could acquire that other business and to grow quickly, right? But, in the world of big business, these guys do not start businesses and things the way that small people do. When big companies want to grow, they acquire. There's a reason for that. They want to be certain that the money they're investing is going to bring some kind of return. On the flip side, when a company like Google invents a new gizmo, they don't create a whole new company and try to see if it can survive and fly on its own on day one. They kind of incubate it within their organization to see if it is even going to fly, right? And so there's all kinds of opportunities in deal making for someone who wants to get into business or someone who wants to exit a business. And it all comes down to trying to be smart. And, don't be the person who invests a whole bunch of money into something that is unproven or a whole bunch of time even. There's always a smarter way to do it.
Mm-hmm. That's fantastic. David, I've enjoyed this conversation. Brilliant man. We've covered a lot, and I know my listeners are going to get a ton of value out of this. So when you're listening right now, please go check out David's site. We'll include links down in the show notes below. Let him know that you heard him on Experts Unleashed. And David, I just thank you for your time, man. I've learned a ton. I know my listeners have earned a ton. And if you're listening right now, go reach out to David, go connect with him, let him know you heard him on the show, and we'll see you on the next episode. Take care.
Thanks for listening to this episode of Experts Unleashed. If you're looking for new and innovative ways to design and execute your plan to become a 6 or 7-figure expert without the massive team, apply now at theperfectexpert.com.